Good evening, everybody. This is the first video I've done since my release from federal prison, and again, this is an educational video of the markets using price and time symmetry. I'm beginning this video with a post that I put on themarketisnotrandom.com on July 2nd, 2014. On this date, what I did was I outlined the master time windows for July, and if you scroll down, you'll see that I highlighted two specific time cycles, July 1st through 3rd and July 15th through 16th. Again, I posted this on July 2nd, 2014 on the blog. Now, let's go and look at the market. Today is July 16th, 2014. Today was earmarked by myself and many other market technical analysts as the high of the Bradley cycle for this year. Typically this year, Bradley cycle highs have correlated to market lows. However, today we had a high. Now this is a 60-minute chart of the S&P E-mini futures contract. It is a continuous chart with all session data, including data that is outside of real-time trading hours. If I highlight the high here, which is the all-time high in the S&P futures, you can see that the date is July 3rd, 2014, which was the first time window that I highlighted in the blog post on July 2nd. If you go to today, you see that we had another high, one tick from a new high. Okay, it's kind of hard to see there. Let me move this number a little bit, but you'll see the market failed to take out a new high today. So essentially what we have here is an indication of a massive market top. We have a double top indication whereby we failed to take out a second high, and we are within the perfect time cycle windows that I predicted 2 weeks ago. Okay, this should be proof in and of itself that the market is not random. I predicted this weeks in advance. Okay, so now that we have this indication of a double top, what are we to do? Well, the first thing I do is I indicate and draw on my chart what this double top looks like. Remember, price and time symmetry is a very interactive approach to technical trading. It's not let's sit back and focus on some random technical indicator. It's constantly updating retracements and projections and analyzing which way the market's going to break based on Klatch's price structure and price theory. So based on price theory in and of itself, we see that we have a range, and if we fail to take out a new high of the range, we must take out a new low. Therefore, based on my trade theory, which you can read about on the blog, I've made almost the entire book online and available for free. It's 99 cents on the Kindle store, and all the proceeds of the book go to benefit the victims of my crime. I make nothing personally off the book, and the ads on the website just pay for the website to keep it going. This is all done basically out of my own goodwill to stay engaged with the markets because truly I love them. So now let's zoom into the 1 minute chart and look at today's price action. Sometimes Q charts takes a little bit to update when you go to the 1 minute bars because it's a lot of data to process. Here we have the 1 minute bar chart from today. If I scroll back, you see that the session started at 6 p.m. last night, and I go and I mark my time cycles throughout the day. We often see highs and lows at the bottom and top of the hour continuously throughout the day, another indication that the market is not random. See all the 30s indicate the minutes after the hour, the 4s that we have the time symmetry, 4 minutes after, 4 minutes after, 43, 42, and then we get over here. If you remember, this was 35 right up here. See, this line up here is the previous all-time high, and again we missed that just by a tick. Here's the double top coming across, and what did the market do? We had a beautiful swing down, okay? And here's my time histogram for the day. Again, you see the groupings of time showing when we should be targeting our trades, and then the market had a 61.8% retracement which looks like this, a 38.2 perfectly. Again, market is not random. And then we popped, okay? The market had this kind of hidden rally right here. It was unexpected of me in real time. However, when you have a major market high, you expect a deep retracement of the high. And the least known retracement and most powerful, as I write about in my book, is the 87.5%. We have this micro triple top at the 87.5%, and if you look at the times, we see that 1430 is the actual high at this 87.5, the last touch. Again, perfect time symmetry within our time window and time histogram. From there, the market had a nice little 3 drives down into the close. Sorry, it was drawn a little awkward by me. And it popped up, and then, as we see now, after 2 recursive 61.8% retracements off of this 87.5, the market is proceeding to break down. So, what do we do now? Well, we could go back to our 60-minute chart, and we can unequivocally say that because the market failed to take out a new high, it must take out a new low. However, that is all contingent on a multi-hour, multi-day swing. Should that happen, we have finally set up our correction. And, as people who've read my book know, the first target of that correction is the 127.2% projection of any double top or double bottom pattern. Right now that's coming in at this beautiful cluster that's sitting right here at the primary 25% indicated right there. That's not the primary, but it's a primary because there's no number next to it. So we have this 4-number cluster sitting right down here between 31 and 36. So we basically have the ability for a 10-point reward to risk, or sorry, a 6-point reward to risk. So if we were to take a short at 72.25, stops at 78.25, which would be a break to new highs, versus a potential reward all the way down here at 35, which, as we can compute, is 37 points. So I hope this proves that the market is indeed not random, and we have the anatomy of a beautiful market top. We have a double top indication with perfectly called time windows that were called 2 weeks in advance, coupled with a deep retracement today in the market, and the only thing that happened is to generate a multi-hour, multi-day swing. However, should we break to a new all-time high tomorrow, the entire pattern falls apart. I hope you enjoyed this first video back, and happy trading, everybody.